Hello everyone and welcome back to another video. In this video we're going to go over one of the biggest financial mistakes you might be making at this very moment, and that just happens to be waiting to buy a home, rental, vacation home, or really any real estate purchase.
But Jason, the market is too expensive. Why would I pay $30,000 or $40,000 more for a home right now than I would have last year? It's just so much, and we're gonna crash.
No, at least looking at the data and comparing it to 2006 to 2008, our last big real estate crash, it's not looking like we're going to be going into a real estate recession anytime soon. But boy, does it make a good headline. Super clickable. This video, though, is not to talk about whether or not we're going into a real estate crash. That'll be a separate video. This video is really going to talk about how much you could be losing by waiting. There are really four areas that could be costing you money that I'm going to be talking about. You have interest rates, inventory, which affects appreciation and tax benefits. And then we're going to talk a little bit about risk and briefly why we're not going into another recession anytime soon. From what I can tell, mortgage rates dropped to a recent low in 2020 of an average of 2.72%. Now, rates are expected to remain low throughout 2021, but have already raised up to an average of 3.18%. Now, that's a difference of about 0.5%. Why does that matter? A 1% increase in interest rate is a 10% increase in the cost for you to own the same priced home. If you were buying a $300,000 home at 3%, but decide to wait and now buy the same home, $300,000 home at 3.5%, is now going to cost you 5% more per year to own the same home. But there's a catch. You now qualify for less of a home because the monthly cost to own that home went up. And to put this into perspective a little bit more, if you look at the high interest rate for 2019, that was at 4.5%. If interest rates just go back up to where they were in 2019, which was still a good market, is costing you 15% more to buy that same home. All right, so let's talk a little bit now about inventory, because when we're talking about price, inventory matters. We've been averaging in the nation 4 months of inventory over the last 6 years. And what this means is that if no new homes came for sale on the market, we would have 4 months worth of homes to sell. Now, a balanced market is 6 months worth of inventory, and we haven't seen that since 2011. And the most recent that we've seen for the national average is 1.9 months of inventory, which is super low. But even in some markets, like for example, the Denver market that I work in, we're seeing inventory below a month, even sometimes as low as 3 weeks, 2 weeks, which is really, really low. And why this matters is simple economics. As inventory goes down, prices go up, and that's missed out appreciation that you could have if you bought. And with that, let's talk about appreciation, because that is probably the biggest lost opportunity by not buying right now. Homes have appreciated over the last 30 years at 4% per year on average. In 2020, we saw a national average of 9% appreciation, and in some markets like Denver, where I live and work, we saw upwards of 10 to 12% appreciation over the year. So everyone that waited a year to buy lost out on 10% appreciation they could have had in their home. And homes are now 5% more expensive to own. And the last piece I want to talk about on this is the tax benefits. A couple things that you can deduct per year is the interest and late fees paid throughout the year, your property taxes per year, your PMI if you do have it, and if you purchased or refinanced a home throughout the year, you can deduct the points that the lender charged you for that loan. Now, a possible variable expense, if you have rentals, Airbnb, or maybe a vacation rental, you may be able to deduct some of the expenses for those. That is something you definitely want to talk to your accountant about and see what you can deduct and what you can't. And a little bonus tip, if you are selling a property that you lived in as your primary residence for 2 years, you will not pay taxes on the profit up to $250,000 if you're single, or if you're a couple that lived in the home married, up to $500,000 on the profit from that sale. Now, of course, there are risks to buying a home. There always are risks to any investment, which buying a home is. Let's talk about that. So what if I'm wrong and the market does crash and we go into another recession here in the next year? What does that look like? To get the best guess we can, let's look at 2006 and see what happened there. If you look at the average appreciation line on this graph over time, we haven't even caught up to where we should be over normal appreciation. But compared to 2006, we overkicked our coverage, where right now we haven't even hit it yet. Now, the people that bought 05 to 07 at the peak of that market and sold before 2015, they probably lost money. If you can hold and keep real estate over the long term, like I hope all of you are trying to do, you're probably going to be okay. Part of the reason the real estate recession of 2008 was so bad is because of the lending standards of that time. Before the recession, people were buying homes that they couldn't necessarily afford, and they're borrowing over what the home was possibly worth. Banks were also giving out loans to basically anyone who wanted one for way too much money, which, when the market did crash, made it that no one had any equity in their home, and it caused them to be foreclosed on or pay to get out of their mortgage. This caused Congress to open up a whole new department to make sure that loans are stronger today, and this also required lenders to recheck income and make sure that people were still employed, as well as a load of other tightened regulations around lending. The people that are being qualified for homes today are better qualified, financially speaking. So the reason today is different is equity. Equity is the difference between what you owe on your home and what your home is worth. In 2009, most people owed more than what their home was worth. In contrast, by 2020, people on average had $194,000 of equity in their home. And also, people starting out are required now to put down more money than they were in the past. So they're already starting off with some equity. So to wrap this all up, by sitting on the sidelines and waiting to buy a home, you're losing money, missing out on opportunity, and missing out on tax benefits that you could have. In the Denver market, for example, if you waited in 2020 to buy the average price home, you potentially lost out on $76,000 of lost appreciation and other lost financial benefits of owning that home. Also, it's now 5 to 10% more expensive for you to own that same home that you may not even qualify for at this point. The moral of the story is real estate continues to be the best investment this country has to offer. And by waiting a year, yeah, you might pay less, but looking at the big picture, you're missing out on the opportunity to build your net worth year over year, cut down your tax liability, and start building wealth. Thank you guys so much for watching. Please like this video, subscribe, and leave a comment. Let me know. Did you buy last year? How'd you do? Are you waiting? I want to know. Anyway, guys, until next time, let's go build some wealth, and I'll see you in the next video.
We bop and hippity hop, as happy as I can be.